I had to come up with a way of determining where I want to be a buyer, because I wasn't a short seller in the beginning. I didn't understand short selling. I was afraid of it. And it didn't make any sense. How can you sell something you don't own and make money, right? It's like, what the hell's that? So I wanted to be a buyer only. So my motto was buy model only. And what was the driving force behind the decisions that made me a buyer? I was looking at a 9 and 18 exponential moving average on a daily chart. If the 9-day moving average, now I don't do this now, folks, so don't take this as the gospel, okay? But I'm just telling you how we have changed, okay? We've definitely evolved. But when I first started, it was a 9 EMA exponential and a 18-day exponential moving average on the daily chart. And I had a 50-day moving average that was just a simple, not even exponential. So what I wanted to see was that 50-day sloping up. I don't care how, if it was a gradual slope, if it was higher than it was 20 days ago, to me, I'm looking for longs. But that doesn't give me the buy yet. I wanted to see the 9-day being above the EMA. I'm sorry, the 9 EMA above the 18-day EMA. But it can't just cross it. I can't do that. I have to wait for it to cross. Then it has to spend at least 3 days above the 18-day. So that in my mind, momentum is absolutely going long. Now, I did not get the best entries. I didn't catch the lows. I was afraid of trying to do that because Larry Williams said, don't go in trying to catch falling daggers. So he was my mentor. So I said, fuck that. I ain't going in and doing that. I'm going to wait for it to be moving and I'll get in sync with it then. And how did I do that? What was my entry mechanism? In the evening time, when I finally found my way home, did my exercising, and then ate, and then showered, I would spend all night long, sometimes going to work, doing that same schedule, with less than 3 hours sleep sometimes. Oh, come on, I'm telling you. You think I'm an insomniac now. I don't require a lot of sleep. I don't know why people think they got to be sleeping their whole fucking life away, but 8 hours sleep to me, you're wasting it. You're wasting it. You would probably do so much better if you get to a point where you can not have to have a job. Do small sessions in sleep. Like I do 2 4-hour sessions. They're broken up. And then I catnap in between when I can. I get so much shit done. That's why some of you like, do you ever sleep? Yeah, I sleep. I schedule sleep. But I don't have the same cares of the world like you do. Like you worry about losing your job. You worry about making sure your kids have your college funds. You worry about how you're going to put food on your table because your job may not require you anymore and make you redundant. So I don't have those fears. And when you don't have those fears, you're energized because that shit's like a vampire. It sucks the life out of you. And it's difficult. It's so hard in the beginning doing this because you have all those real world cares of the world. They're real. You're not exaggerating it. Believe me, I experienced all that stuff. But for me, the desire to get the fuck out of that shit was more than any of the fear. I had to do this because I couldn't exist living a mundane existence. I can't do that. I'm not wired for that. So I had to go in and look at 1-hour charts in the evening on end of day data. That means it wasn't even real time. I was downloading my data using Metastock. That was the platform I used for my charting. Metastock was a charting package, kind of like TradeStation or Supercharts. Supercharts isn't a thing anymore, I'm thinking. TradeStation's still around. They've evolved into a broker. But Metastock was my joint. That was my weapon. And I thought I had everything figured out with that shit. And in the beginning, I had every indicator you could put on a chart, and you couldn't see my candles. Well, I didn't have candlesticks in the beginning. It was open, high, low, and close. But you couldn't even see price. I didn't give a shit because the indicators, I thought that they were the trick. That was the thing. Don't look at price. That's the distraction, right? When in fact, it's the indicator that's the distraction. Okay, and that's why I thumb my nose at that shit, because I fell victim to all that stuff. And yes, there is absolutely a way to use indicators and use my content and make money. Absolutely, you can. But the problem is you end up falling into this trap And yes, I'm getting to the point about what I was looking for on the hourly chart. Settle the hell down. But you get caught up in this rat race of finding out what indicators you want to have, what their settings are supposed to be, and which ones are better at doing what. So there's all kinds of books written about, and if you buy 12 different books about indicators, rarely will they agree on the settings. Rarely will they agree on how to use them and when to apply them. But they have an ability to go back in time and find the cherry-picked examples of where the shit worked perfectly. But then when you go out there and you try to do it, you're wrecked. I went through that shit for years, convincing myself every single time that I failed at doing it. It was just, okay, it's the right indicator, but this guy doesn't have the right settings. I'm going to buy another book or another course, another DVD, okay, that talks about it, and they will give me the part that this guy left out. And it never worked like that. It never fucking worked. So I was like, there's so many holes in this industry, so many opportunity for people that would know how to do something. Why don't they come out here and simply just produce something that works? Like, it removes all the bullshit, cuts right down to the bone and says, okay, no fluff, no indicator. This is what price is going to do. And I don't give a shit if you believe it or not, because this is how it's going to be. And I said, I can't find it. I'm looking around. I can't find anybody able to do that. So I'm going to be that. That was my passion. I'm going to fill all the potholes in this industry where the shit doesn't work. I'm going to fill that in. I'm going to give you something that works. Not just it works okay. It is absolutely precise. Down to when you can expect it to form. What days, what months, what markets, what direction, what time. All that shit was my passion. But it started with a very simple little bullish divergence when the market was oversold on a 60-minute chart. What market was that? The bond market. The bond market. I segued from currency futures into bonds like my second year. And I was like, I like bonds. They trend real easy. Like, they're nice. Like, when they start moving, they just tend to move for a good period of time. And I wanted to be part of a momentum. And currency trends, they were great, but the problem was their gaps were scary. Like, I wasn't able to hold anything overnight because I was not aware of how Globex traded. I wasn't aware of, overseas, how that time difference, what markets are behaving like at that time. I was brand new to all that stuff. So I was afraid to touch that. So if I did any kind of trading in not index, but currency futures, I would do it as a day trade only. And I would get out many times way before the market would close because I was afraid. I was stone cold afraid of doing it wrong, because if you were in a market, and if you look at a currency futures contract back in the 90s, sometimes it would gap a lot. And if you were holding on to something, you could wake up and be completely decimated. So that scared me. So I said, well, I'm going to be focusing and specializing in bonds. So I want to look at that market. So my model really began on the back of 30-year Treasury bond. And I would use a 60-minute chart. Now, mind you, remember the daily settings would be this. The 50-day moving average, which is a simple moving average, it needs to be sloping up, okay? That's all it needs to be. The 9 exponential moving average needs to be above the 18-day exponential moving average, but it has to be there at least 3 days above it. You can't just cross it. We're not treating it like a moving average crossover or a golden cross. We're not treating anything like that. It's really moved. And then what I did was I was looking for 60-minute or 1 hour oversold conditions that presented a bullish divergence, a typical, standard bullish divergence where the chart would create a lower low in price, but the stochastic I was using, which was a 14 smooth by 3, that was my settings. And if it created a bullish divergence, I would be looking for the opening price at open, which is the reason why I had the quote track. I'm watching that. And I get the opening price, and I would wait for it to trade just a little bit below the opening price. And if it did that, I would buy 5 ticks above the opening price, thinking I'm buying strength. Where did I get that from? I got it from Larry Williams. He buys strength. He was buying on stops, and that was my model. I didn't understand buying limits because I didn't know where I could place my limit order, because I was afraid if I put a limit order in and it filled me and it went further down, I didn't know how to place a stop loss yet. It was all brand new to this, right? So when I caught a runner, man, it was great. It was amazing. But when I put the order in, the stop loss, because you got to put in an order canceled order. Okay, so it's parent contingent, meaning you call your broker. This is how we did it back then. You call your broker and you say, okay, I want to buy Christmas bonds, which is December contract of 30-year Treasury bond, and at this price. Where's your stop? You want to use it? Do you want to use a stop? Yes. You tell them how many ticks away it was. Okay, and I would use a 10-tick stop. So it's about $300 some per contract. And in the beginning, it was just one contract I was trading. So I would have no target. I would just wait. I wanted to see how price behaved. Sometimes it would fill me and then stop me out. And that would wreck my whole fucking day. I would be half-ass filling the machines because I was mad. I'm mad. So I'm just like you, okay? I'm just like you when your shit doesn't go right. You want to blow up. You want to show the world that you're pissed off. You don't want them to ask you what you did wrong, but you want them to understand you're pissed off. I'm having a bad fucking day. Don't talk to me. So I would be driving around all through Baltimore City and Baltimore County, filling up vending machines, pissed off that I couldn't see what it did. And then I would go home that evening, go through the process of doing my normal thing, work out, get all the stress out of me, take a shower. I've already ate. Now I'm looking at the charts, and I could see these things start happening. Like, if I would have saw that on the chart, I could see how I wouldn't have bought there yet. I would have done this. I would have done that. And that sounds like, oh, it's hindsight 2020. But you know how I trade now. I can tell you, honestly, if I would have done something, I've done it this year. I did it last year, too, telling you. If I would have been trading, I would have got stopped out there if I would have done that trade.